All right. Beeline Holdings CEO Nick Liuzza. Hey, let me ask you, am I getting the name correct? Am I pronouncing it correctly?
It's Liuzza, but you're close enough.
Okay, I'll remember though. I take pride in being able to pronounce names correctly. So if I get it wrong, I want to be corrected. First of all, thanks for joining us here. Beeline Holdings, it's technology-driven mortgage lender and title provider building a fully digital AI-powered platform that simplifies and accelerates the home financing process. This is awesome. This is a theme that we have been talking about. A lot of the stocks that we've been looking at is like Rocket Mortgage and UWMP. So I'm just going to start right there. First of all, tell us a little bit about yourself and your company. But how is your company different than Rocket? What makes BLNE different from other mortgage lenders?
Well, look, this is my fourth company, three successful exits prior to this one, very experienced management team. And why are we different? Well, look, we built our brand, we built our platform, and all of our tools for the generation that grew up with these phones in their pockets when they're 7, 8, 9 years old. There's 75 million millennials out there and 25 Gen Z right behind them. And these guys, they shop differently than what you and I do. And so we built our platform for them. And we offer a wider variety of mortgage programs than those other mortgage lenders do as well. So if you don't qualify for a conventional Freddie Fannie mortgage, it's game over. As opposed to at Beeline, our AI will direct you to a whole new suite of products that are more designed for the gig economy.
Okay, interesting. So, and that really does kind of separate it from Rocket. I'll be honest with you. I use Rocket myself. Full disclosure, I used
They're
it
great.
for my
They're awesome.
refinance, and I'm extremely happy with it. I'm happy with all of the tools there. What would
Yeah.
it take to maybe kind of draw me away from that? How do you plan to capture market share from other companies?
Yeah, well, look, Rocket they own 8% of the industry. They
Mhm.
are the premier leader, and they've been around for a long time. So they know what they're doing, and they're very good at what they do. We're not trying to necessarily take customers away from them. We're just trying to find our own niche and gain market share
Sure.
ourselves by offering a different platform that's different than Rocket, right? And so again, it's a 7-minute journey. It's very fast. The AI will make a decision and give you 90% certainty about whether or not you qualify in 7 or 8 minutes, 24/7, 365, and our chatbot will answer your questions at any point in time. I'm not sure exactly what Rocket is doing in terms of their customer satisfaction, but I know that we're meeting the mark for our demographic. And I also know, again, if you're not sure you can qualify for a conventional mortgage, you should come to us first because we're going to offer you a bank statement loan or a DSCR
Mhm.
loan. Though these loans are more designed for the gig economy as opposed to
Mhm.
Freddie Fannie conventional mortgages. For example, a bank statement loan doesn't even look at your income. It doesn't even ask you what your income is. So if you've got lumpy income that goes up and down, or you've got K1 income, or you're probably not going to get a mortgage a mortgage at Rocket Mortgage. Whereas we will
Got
not
it.
even ask the question and look at your bank statements and probably give you a qualification.
Okay, really good explanation there. Really appreciate that. Let me ask you, what do you think about the current interest rate environment? Cuts, the cutting cycle that might be upon this, and of course, how is that beneficial?
Well, listen, we're super excited. It's prime time for us. It's
Mhm.
6 o'clock, and you've got the greatest run in the world coming down the mountain, getting ready to ski, and now it's time, right? We've been duking it out in the trenches and really working very hard with our foot on the gas pedal to wait for this moment. And now the headwinds are getting ready to turn into tailwinds, and that means very fast revenue growth for a company like us, extremely fast revenue growth because the market's going to normalize. And again, we are addressing the needs of 75 to 100 million younger borrowers who already represent 40% of the market, and that's only going to continue. So we're quite excited about the interest rate environment. We know that the market's going to normalize, and we know that I think the August purchase numbers are already out, and they're very strong compared to what analysts thought. So again,
Yep.
we're getting ready to get into a good market here.
Yeah, and I'll be honest. One of the things that we've talked about as a group is how the young home buyers really aren't there. First-time home buyers really
Yeah,
struggling. It'd be great to see
yeah.
some gaps get closed in that. I completely agree with you there. All right, what do you see as Beeline's biggest near-term catalyst? You started talking a little bit there about tailwinds. I wonder if you can expand on that. What do
Well,
you think about their near-term catalyst that could transform the company's profitability?
yeah, but we're already debt free.
Mhm.
We're going to be cash flow positive in January. We've been working toward that for a long time. Our heavy spend is behind us. We're ready to start generating revenue. And oh, by the way, we have partnered with a brand new coin, which has not been released yet. That information will start coming out toward the end of October, and that's going to allow us to offer a fractional sale of equity products. So if you have equity in your home and you need liquidity and you cannot get it, we're going to be able to offer you a product where you can sell a portion of your home equity, and we will leverage our partner who will mine a coin. And essentially, with our partner, we're bringing the blockchain is meeting the real estate chain on a one-to-one basis. And that is a new funding source to fund liquidity for people who cannot get liquidity because they don't have the credit score, they don't have the job, they don't have the income. If you're a baby boomer and you're looking at a reverse mortgage, this is a much better source for you. Or if you just don't want monthly payments, if you just don't want to pay a mortgage and you need some cash, this product is going to be relevant for you. And so for us, this is a, I mean, I don't see any other mortgage lender doing this at the moment. And so for us, yes, this is going to transform the industry and catapult this small little creative company that's addressing the needs for this generation, but also with a product that doesn't exist in the market as of right now by other mortgage lenders. There are fractional sale of equity products out there, but not offered through mortgage lending platforms like us.
Okay, it would be exciting to see if you can become a disruptor in this industry, without a doubt. Now, again, you're making my job real easy here, because you're kind of talking about the very next question I wanted to ask you about. You've announced some exciting partnerships and initiatives recently. Can you walk investors through how these collaborations are going to translate into real revenue growth for Beeline?
Well, look, I mean, our true partnership, we are in constant negotiations with partners, and I would say that just stay tuned on that. As far as we do have some partnerships in place right now, mostly around investment property transactions. But when you have a platform like we do, and you can give 90% certainty in a 7-minute, 8-minute journey, and you can offer a wider variety of products, you're going to get the attention of partners that need mortgages. And so we have their attention, and we are in discussions. And I would just say stay tuned on partnerships. I'm not ready to kind of talk just yet about new partnerships, but rest assured, we're in discussions.
Hey, stay tuned is perfectly acceptable. I appreciate it. Okay, what is your? These are going to be some of the tougher questions. I know with the investment group that we have here, with the traders that we have here, some of this stuff is on the top of their mind there. What does your capital structure look like today, and how confident are you in your ability to fund growth without diluting shareholders?
Well, listen. First of all, I have $16 million of my own money in the company. Our CEO just made a $100,000 investment. COO just made a $100,000 investment. Our entire accounting team has made investments in the company. And so I'm very confident we can cash flow ourselves. We are going to be raising some money, though, because we are a mortgage lender, and we have to have a very strong balance sheet. And that's how you grow your warehouse lines, is by cash on the balance sheet. So we'll be raising some money to put some cash on the balance sheet, but not a lot of money. And it's value dilution. I can assure you, having $16 million in the company, we can be very proactive at this point, given that we're debt free, given that we're getting ready to be cash flow positive, given that there's tailwinds and not headwinds. So we can be proactive about our fundraising and pick our spots and ensure that if there is dilution, there's value dilution. So the value of the company goes up, even though there may be a smaller percentage that you would own as a shareholder. So I'm not sitting here with $16 million in my own company to dilute myself. I can guarantee you that. We're going to be very smart and make very educated decisions so that our balance sheet looks good. We can offer what we need to offer. And look, we only have, a $75, $8 million market cap. Give me a break. I mean, look at the comps out there. Look at what our runway is. It's huge potential. And so I wouldn't be as concerned about dilution. I would look more about the opportunity and the fact that we're innovative, we're smart, and we're sitting side by side with our shareholders. We don't want dilution either, but we want to be smart, and we're playing chess. We're not playing checkers.
Yeah. First of all, that's a great answer here. If you have that's what we love to see from smaller companies here. We want to see that the executives of that company have their own money tied up. If your incentive is to drive the stock higher, that works for us as investors. Perfect answer there. And the other thing about our particular group is that we have seen, I think that you called that value-based dilution, or what was the term that you just used there?
Value dilution. It's like, wouldn't you rather own 1% of Apple than 100% of some new startup? It's kind of like, it's like the value of the company goes up right? As you
Right.
deploy new funds, and if you use those funds properly, the whole value goes up. So you may own a smaller percentage, but your overall shares in your stock account are worth more money because the money was used appropriately. And so look,
Right.
we're not like, look, there was a time when we were losing $1 million a month, and the headlines were, "Why would you ever invest in a mortgage company? It's the worst real estate market in 30 years." And we kept our foot on the gas pedal, and we kept building and building, knowing that the window would open. And when the window opened, we would be ready for this moment, which is where we are. So whatever dilution we have right now, it's going to be minimal compared to the opportunity.
Okay, that's absolutely perfect. And again, we've seen companies raise money and then use it appropriately, and we've seen what that can actually lead to. So really good stuff there. Appreciate that, Nick. What are your targets for revenue, EBITDA, and cash flow over the next few quarters that investors should be watching?
Well, I can't answer that question, right? Because I look good. That was a very crafty way to sneak that in. I got to tell you, this is not your first rodeo, and I
Nope.
respect and appreciate that. I can tell you what I've said in the past and what our goals are, right? And so it's a massive market. The number one lender only has about 8 to 9% of the market, right? And so just a few basis points is a multi-billion-dollar company in this space. Our goal, and I've stated this before, when the market normalizes, is to start closing 700 loans a month, which is about $100 million run rate. I think once the market normalizes, we can be there in less than a year. So, and that's just from the mortgage lending division. So that's a very, very small percentage of the market, and that's addressing the 75 to 100 million younger generation out there that we think we're speaking to better. We're speaking to faster. We're being more creative. And go to our website. Our brand speaks their language, the way they want to communicate, and the way they want to do business. So I feel like getting to 700 closings and that $100 million run rate mark with tailwinds and not headwinds is very achievable in the time period I just said.
Okay. Okay, fantastic. I'll get you out of here on this. First of all, really good stuff here. We really appreciate all of the transparency and honesty. How do you plan to keep Beeline's technology and offerings ahead of the curve as the industry evolves?
Well, listen, that's a really good question. I don't think I've been asked that question in the past. So there's a couple of things. First of all, when you are in the trenches and you are actually innovative like we are, this is not our first rodeo. We built mortgage tech in previous businesses and companies. And when you're in the trenches, you have a major advantage versus some Silicon Valley come in who thinks they know what to build and thinks they know what to do. And they come in and we are in the trenches every single day. We're closing loans every single day. We're speaking to customers every single day. Our product team is based in Australia, and they are excellent. And we have 6 years in the industry now building software, building technology. We know what we need to build. We know where the areas are. And so we're going to stay ahead of it because we're building tech to drive our business, and we want to gain market share. So our motivation is off the charts to get there. So we're motivated, we're experienced, and we have the platform to do it at the same time. So I think we're going to stay ahead.
Okay, absolutely fantastic. Again, Nick Liuzza, CEO of Beeline Holdings. Folks that are looking for that, that's ticker BLNE. I really appreciate the time. I really appreciate the interview. And I think what we should do is have you back and
Love
check
to.
out how you're doing along the road.
Yep.
Would you be interested in that?
Absolutely, man. I love your channel. You guys are great. I think you're adding a whole new cutting edge to what needs to happen out there. And so I would absolutely be honored to come back.
Okay, fantastic. Nick, we will absolutely have you back. Have a great rest of your week. Good luck
Thank
with Beeline. This is really, really exciting. And I'll tell you something. You make some big moves getting gig economy workers, first-time home buyers, and young buyers into this market. I actually think that's going to be better for everybody in this country. I wish you the best of luck. Thanks for the time here this morning. Look forward to having you back.
Thank you very much. I appreciate the time today.
Yep, no problem, folks. That is Nick Liuzza, CEO from Beeline Holdings. Let me actually grab my screen here real quick. Here, for those, I'm sorry, I might have done a poor job there at the outset by not mentioning the ticker. I apologize. I take blame for that. Ticker again, BLNE, Beeline Holdings. Really, really good stuff there, folks. You know, I'm always going to ask these CEOs about dilution and all of that. I got to be honest with you. Thought his answer was perfect for that. Thought his answer was absolutely perfect for that. I really appreciate that. We are definitely going to have Nick back. Shout out to Zoltan, too, from our news desk team, who continues to outdo himself on a regular basis, getting us quality guests in here. Folks, I don't know if you remember, but we've actually traded BLNE off of the scanner. Whenever I see some of these small cap companies that are really trying to like get something done here, we don't just want to look at them because they move on a scanner. We actually want to get the lowdown there. Really appreciate Nick giving us some of his time here and helping us out with that. Really, really good stuff. Look to having him back. Appreciate all of the warm things you folks are saying here in the chat. Really, really good stuff.